Today's topic is financial automation for SMEs. Discuss the key to smarter business growth through automation and the reasons why behind the automation and the results and potential benefits that may arise from the same. First of all, let me take you through the table of contents through the areas that we want to touch upon while we go along. We'll start off with the major financial challenges that are faced by SMEs and the impact that they have on the SMEs, current and long term as well. These are, I've chosen 4 of the most common issues that SMEs come face to face on a daily basis. And these can be, these can be mapped on to any kind of SMEs operating in almost every field that we currently know about. Then we would come out to case studies. These are real life stories about SMEs who were struggling with manual accounting and trusted these manual processes since their inception. Now, when they were growing and scaling up, these manual processes started becoming a hindrance and resulted in a lot of bottlenecks in the financial calculations and future direction, future investment policies of these companies. How they overcome these, how they overcame these hurdles, and how accounting automation actually helped them, propel them on a path of success. These are the case studies about. We would like also to tell you about the key areas of financial automation that SMEs should target. These are the key 8 to 9 areas that are primary ripe for automation. And like out of any of these areas applicable, obviously SME wise, 5 or 6 are such that any SME should start to automate right from the point they grow or from their inception itself, if possible. Then we come on to choosing an automation platform and what are the key criteria that SMEs should be looking to and should be able to imbibe while choosing an automation platform. Okay, so moving on, we will have a Q&A session after this. Okay, so let's start with the challenges faced by small businesses. These are the 4 major factors that we will be talking about: manual financial tracking, cash flow mismanagement, lack of real-time insights, and manual approval of workflows and reimbursements. I have chosen these 4 because these 4 seem to apply across a wide range of SMEs involved in industries and by industries as well. Coming on to the challenges of manual financial tracking. By the way, let me tell you, if there are any queries while I go along, if you'd like to stop me and make some queries, please ping me on the chat and I'll be aware. Okay, first let's start off with manual financial tracking of SMEs. What we know is manual financial tracking has been, okay, let me start off like this. Startups, SMEs, the main focus while they enter into business is the product or the service they're offering. They might be going for choosing the best engineers, the best developers, the best manufacturing machines, but not really the best accountants or the best at their jobs. And if you look at it from a very practical point of view, accountants are not really verified by the quality of their colleges, by their percentages in joint entrances, others. And not all accountants you hire in your department can be gold medalists of their college. As such, the accountant department is always something which is built with continuous engagement with the company. But manual financial tracking is something that quality of accountants does not influence with immediate effect. It takes a lot of time and someone is experienced to a lot of minutiae. Inefficiency and time consumption are thus the first major factor that comes into play during manual financial tracking. Spreadsheets and ledgers are heavily time consuming and prone to errors. Given the cell-based nature of these spreadsheets, there are times when people who are accountants by nature and not really Excel experts might copy paste or while changing sheets, change a decimal, change a number, copy and paste into some other cell by mistake, and that's all that's required for an entire month's or a quarter's effort to go down the drain. And then you have errors. And once errors start happening, verification becomes a nightmare. As such, we come to the increased risk of errors. humans working on Excel sheets, and extensive Excel sheets at that. Once your employees or your colleagues start coming in with other kinds of reimbursements, maybe daily operational expenses, vendor payments, all of these put into Excel sheets lead to inaccurate financial records. Once financial records are inaccurate, your decision making will not be based on real facts and figures. That comes with the game, right? What will happen is your records are prone to error, and because they're prone to error, any decisions or fundamental judgments based upon these numbers will automatically be prone to errors, not based on factual data. That is the case. As is the case, if it is so error prone and cumbersome to compile when you actually need it, you will be faced with a lack of real-time visibility. There will not be an immediate moment when you can just tell your accounting department, which is manually working on a lot of other things than just compiling reports, to bring me within a flash of a minute a report based on this particular department's expenses in this particular domain. That would take a number of days, especially if you are running a business that's spread out or laid out across a geographical location. This is what leads to our very next point: complex and delayed reporting. As I said, you do not get access to immediate knowledge, immediate information or data. Manual report generation, when you are spread over geographically, would require someone to visit these places. Maybe it would take a week to compile a comprehensive report. Even after compiling reports, you might find yourself unable to meet compliances and audit requirements because your decision making has been postponed, has been delayed because of the time it took to compile these reports. Such is the nature of manual tracking. Long-term issues, for some of the most important and immediately coming onto the big stage, are scalability issues. As your business will grow, manual systems will simply break down. They will not be able to cope with the amount of data, the number of employees that would come in. Manual operations are still very painful and cumbersome and time-taking for departments or companies which run with 50 or less employees. Just imagine something above it, 75 or 78, and you are a company who has a lot of, who has an extensive supply chain or has a lot of vendor visits or site visits in turn, due to which reimbursements are required, tracking is required. Scalability goes out of your current scheme of things, because that's not how your accounting department will able to keep pace up with. And if your accounting department is lagging behind, it means your decision making, your ability to pursue challenges lags behind. This results immediately into poor cash flow management. Because of this manual intervention throughout, you will not be able to track inflows and outflows whenever you want to. You will have to wait for a transaction to complete, which is also given to bank holiday dates, given to vendor payment system availabilities. This might lead to a potential liquidity crisis, where you are using your working capital on a daily basis and may lead you to go towards debt. Compliance risks are something which are synonymous with poor cash flow management. Higher chances of non-compliance with accounting standards. Accounting standards are something which mandate a certain amount of inventory, a certain amount of overheads, a certain amount of account payables to be within certain parameters to classify your company as operational or under debt, red, green flags. So once you are struggling with cash flow management, you become a target for poor compliance issuance. Data analytics and data access limitations are something which comes as an afterthought here, but then it is important to be mentioned though. When it is simply all manual, getting access to data is tough in itself, because you might have multiple offices, multiple systems, multiple departments keeping their own data. The account department will not simply be able to just collect all the data and compile it in a matter of hours or minutes. It will take weeks, maybe a month to do it. As such, you are not getting access to data or analytics. Sometimes you might have an accounting department, but do you really have a data analyst there who's accounting for the data forecasting, who's accounting for inventory management methods, statistical methods. Most sure if that's not the case, then you're limited immediately as long as the root cause starts from cash flow mismanagement. Coming on to a major threat to stability in the ways that cash flow mismanagement is that, first of all, the inability to cover daily expenses. In such a situation, daily expenses are something which becomes so tough to cover that you will not be able to, as you can see, struggles in paying payroll, rent, utilities, and inventory bills. When you're struggling with paying the basic utilities, there are bound to be operational disruptions. In manufacturing or even in services, there are subscriptions for softwares, there are subscriptions for machineries maintenance. If you're not able to get things up and running on time, you will be losing out on contracts, you will be losing out on supplier trust. Same as I said, leads us to missed growth opportunities. These are all but missed growth opportunities. Due to this cash flow crunches, you will not be able to invest in marketing, hiring, or expansion. For example, let me tell you of a scenario. You have just gotten an order for which you know you have the capability, but all you need to do is hire 3 more resources, maybe buy 1 more machine. But given your cash flow crunches, you are not really in access of that much cash anymore. In such a situation, what happens is, this is an opportunity which you could have taken benefits of and risen your business to, but then you find yourself in a position where you're compelled to not to take part in this because of this cash flow crunches that you're facing. This also leads to damaged supplier relationships. As I had mentioned a few minutes earlier, your vendors and suppliers in most industries, especially while dealing with startups, SMEs, smaller enterprises, they're pretty strict about the constraints and the parameters that they require from you while paying them. When you mismanage these issues and you are cash strapped, which is why you cannot pay them, their trust automatically goes down. What happens in the future is they increase their prices for you because they know that this incidents might occur. They are not in a position to take time-related cash losses, or they will reduce the credit terms that you are given. This is a sort of disciplinary action that is common in this industry, in most industries. And as I mentioned earlier, because of this cash crunch, if you want to avail growth opportunities or pay suppliers on time, you want to maintain the relationships, what will happen is you will find yourself burdening up on debt. Your reliance on loans will increase to cover cash gaps, which will lay a direct financial strain on your company's valuation, on your overhead excess, and a lot of other issues down the line. If the company, basically, your goal will not be directed towards growth, it will be a survivability issue at that point of time. I hope I am being clear on this. You can please let me know on chat if I'm not. Okay, so long-term impact of cash flow mismanagement, as I said, are liquidity crisis and an insolvency risk, which might arise from debt. This has already been touched upon. Inventory management challenges occur when you are dealing with the unpredictable cash flow. You are expecting money from somewhere, which is why you think, let's order this much of inventory right at this point because we might be facing a cash crunch right after this. So you order it and then realize there was this offer that was about to come around the next month and you are not able to take part in it because you have already in excess stock of inventory and you have not made the avenues enough to sell it immediately. This leads to poor customer experience as well if it's the opposite of the story. If you are not in a position to replenish your inventory levels because of this cash crunch, you will only arrive at a point where customers make a poor perception of your business. For example, you run a business of multi-fiber filaments which are used for sewing leather and a lot of other stuff. There are 8 or 9 different types depending on quality. But such is your cash flow crunch that you are only in a position to manufacture 1 or 2 types. When a customer walks into your facility and sees that this is how you're operating, they might not have the best of impression about you, whereas the rest of the market has a lot to offer. This is what brings us to our next point, which is the reduced marketing and competitive edge. Because this cash flow mismanagement is not being faced by your competitors, what they will do is they will increase their range. They might, in the same example, in kind of multi-level assignment, they might try to buy new machines. They might introduce a broader range of offerings, and that in itself would be something that would take your customer away. You, on the other hand, will be cutting on marketing and promotions in order to save on your cash. This marketing and promotions will further work to weaken your competitive position. So it's a vicious circle that most people find themselves in once cash flow crunches start. This overall leads to business stability. Frequent financial firefighting becomes your daily to-do instead of strategic planning, which is what SMEs should dedicate half of the week to. Unpredictable cash flow cycles will simply take away the ability for you to focus on growth, because you will be fighting on a survivability basis on a day-to-day availability of operational expenses, day-to-day bill-to-bill existence is what it's called in some circles. So lack of real-time insights is another major challenge that are faced by SMEs and has a very adverse impact on business growth. Lack of real-time insights generally happens when you are manually working and there are a lot of silos within your business operations. By silos, I mean containerized areas where information does not overflow or interchange between each other. What it leads to is slower decision making, because as we discussed earlier, you are having slow access to data. It is not that you ask for a report regarding a certain department's profit or losses, or a certain department's account payables, or maybe the entire business's account payables. It will not be immediately available to you. Something that might be available to you might be latest a month ago, because at most points of time you will find the account department still struggling to reconcile what was happening 15 days ago. So you can see how they lag behind, given the kind of system we have manually on an average. It impacts agility, and hence you might be late in seizing opportunities which require immediate responses. This brings us to our next point, which is missed opportunities. So while you are busy dealing with the data, waiting for the data to take form and reach you, most probably in the form of a report prepared by not a professional data analyst guy, but maybe a CA at the most, or a senior accounts department guy. These reports are mostly word heavy and are not interactive in the forms of graphs, charts, or data tables. What happens is, what is immediately visible in graphs and charts require reading through an entire 100-page, 120-page report in order to come a conclusion to, and that too might not be accurate because it's word heavy and less data savvy. What it happens is you delay in reacting to least lot sales, which evidently results in a reduced market share and hence slower growth. It's overall an inability to capitalize on time-sensitive business projects. This is a major impact of lack of real-time insights. Is this because these missed opportunities may never return to you? Although you have missed it once, businesses are built on one-time opportunities. If you miss these opportunities once, it might not be very. The people who were giving these opportunities to these businesses might not be in a position to offer the same rates or the same kind of advantages that they were offering during the first advertisement. Competitive disadvantages are larger players who have the ability to implement data analysis teams, software, automated analysis softwares will have access to data, real-time data, whenever they want. They will obviously make smarter and faster decisions. This is where a lot of SMEs fall behind, because the kind of infrastructure that it requires to create a strong data analysis department is something that SMEs are not always focused upon. As I started at the beginning of this presentation, departments are focused majorly on hiring and working upon the kind of talent required for the main product. The accounting department takes a backseat. in such a scenario, when your business scales up, when the number of employees grow, number of projects grow, number of site visits and reimbursements grow, there comes a time when there is a lot of unclarity, a lot of fog related to the data. You can't make faster and smarter decisions which are not based on fact, right? If you need facts in front of you, you need the data ready and available. Bigger companies who have access to such facilities will obviously make faster decisions and more informed decisions. This brings us to why SMEs struggle with real-time insights. As I said, first is resource constraints. SMEs might not always have the access to financial, technical, and human resources required for installing a data analysis system on their own, a manual data analysis system. In fact, some SMEs might not be in a position to invest in an automated analysis system too, because they've just started out on their business and would require more cash to be injected into the system for them to be able to take advantages from this. And because of this, they might start out. In fact, the dangers do not try when you start out. The dangers actually come in and affect you when you are actually doing good and are on a growth curve. That's when your focus goes more towards the product and the services being offered, more towards the coverage of the geographical spread of your customer clientele. What happens is the accounting department takes a backseat and they deal with a lot of murky details. And what comes out at that point of time is a very fuzzy and foggy picture of the financial health of your organization, because they have lost touch with the pace that you are working at. So data quality and silo issues are also something which I had touched upon. What happens is, if you are a multi-department business, if you are a business who is spread across multiple corporate offices all over the nation or internationally, it leads to a lot of fragmented insights. Every other department or every other silo might be operating on their own instead of an overall unified picture of how the business is doing as a whole. This the other sort of departmental insights would give a very fuzzy picture, because some departments in some regions might be doing very well with the same product, whereas some departments might not be doing the same rate of growth or CAGR. But when you see a complete unified view, redundancy is reduced. There are a lot of things which become clear, which are not clear or transparent in a siloed information structure. So poor data collection and storage practices reduce accuracy, of course, that's a part of it. Lack of technical expertise is something also related to our first point, resource constraints. Shortage of skilled talent to analyze and interpret data effectively. So these are guys who are data analysts and not really accountants, and as such have a different pay scale. And most SMEs who have invested more on getting the best developer, on getting the best manufacturing machines, on getting the best skilled or semi-skilled talent to work in manufacturing or in the services departments, might not have had the bandwidth to let investments flow in that direction. As such, what stems out of it once you start growing is a difficulty in deriving actionable insights. Decision making depends upon actionable insights, and this comes when you get access to data easily in a understandable format, a format which can be interpreted and disseminated for further down the line pipeline to other managers for implementation of your solutions. That kind of data tough to come by if you are still on manual processes. So manual approval workflows are another major challenge that we are working with. Manual approval workflows are something which lead to inaccurate expense reporting that is the crux of it basically. Manual data entry working on Excel sheets. Someone is bringing in physical receipts and then someone looks at those receipts and types in. There might be different pages within an Excel sheet maintained, a different tabs maintained for various individuals within a department, for departments within the business, for business lines within the business. This is a plethora of spreadsheets, okay? And this is a recipe for errors. Missing reports and misreporting are very common in this field. And a lot of it's common in even places where there are automated workflows, but some sort of manual reimbursement processes still remain. It is still common for errors to happen in this area. Manual expense verification. Once a report is submitted, the verification, as the statistic says, there is a statistic by Salesforce. It says 1 in 5 reports contain errors requiring line-by-line review. So can you understand the line-by-line review time required for financial teams in fixing these mistakes? And even then, no financial team might be able to vouch for the authenticity or for the correctness of these Excel sheets, given the fact that this was compiled over a month, maybe over 6 months, and within that, there have been a lot of running around behind employees, a lot of searching for receipts which have gone missing, a lot of misreporting, which are all embedded within that Excel sheet and are now the only numbers that you have to go by. There is no proper auditing. Even if there is an audit, there is no proper proofs of documents regarding every single expense. This brings us to complex multi-level approvals. Because of these manual mistakes and because of these errors, multi-department approvals have been the norm in SMEs. In SMEs which are slower, obviously it is not that, but I'm talking about SMEs for high value claims that might be the manager of that particular department. From that manager, it might go on to the director, from the director to the accounts team head. And from the accounts team head, someone will pick it up, and maybe there will be verifications, there will be interviews on the cost, why this cost, when was this done. This might be done 2-3 months ago. There might be receipts which would have been misplaced. There, just imagine the kind of time that is being required and the dependency that most businesses have on the authenticity of the individuals' statements. Because as we will come on to this next, reimbursement challenges, as you see, long reimbursement cycles are the same ones that we're talking about, complex multi-level approvals. As approvals take time, multi-levels, the reimbursement cycle continues. Delays can even happen after approval. It happens because there are some SMEs operate on seasonal cycles. Employees may wait weeks or months. What I was coming to was this fraudulent claims and non-compliance. Manual checks fail to flag inflated or duplicated claims. As we all know, there are a lot of claims that can be done. You enter a petrol pump, get them to make a cashback receipt for you, get them to give you a handwritten receipt, a lot of things. You cannot enforce policies here, and because you cannot enforce policies here, transparency is limited. Because of this limited transparency, these practices are accepted during reimbursements. However, automated practices and automated implementation of reimbursements, there are certain areas which give reports of every pence, every penny that enters or leaves your business. That's a different topic. We'll come to that. Lack of real-time visibility again. Because of this manual reimbursement issues, finance teams lack live insights into expense trends. For example, I as a manager of a department cannot simply walk into the finance department and ask for give me the budget trends for my department in the last 6 months. It might require a lot of time for them to compile a report on this, because they might be working on the last month's reports on reconciliation. They might not yet have reached this month's latest reports and data. Such is the issues with manual tracking and manual reimbursement. This obviously impacts cash flow management and budgeting accuracy, because if I am not in control, if I am not in possession of historical data, how do I account for? How do I even make an average mental calculation of what my next coming budget should be like? I am aware of the errors in my past budgets because there are errors which exist in my current reimbursement cycles. So I can never be sure, and I can never put a cap. If I put caps on my department spending, what happens is I'm in a position where I can make budgets, which is why I'm making caps, right? But when I'm not in a position of making caps, I simply cannot make a sturdy and robust budget. As it all happens, infrequent expense claims are what it leads to. These are irregular submissions. These submissions do not happen in a routine, do not happen seasonally, do not happen within a business cycle. It happens, some departments, people might be going on for reimbursements during a certain period, some departments at certain period. What happens is, Either you put 1 or 2 people from your accounting team who are entirely doing the reimbursement thing for the entire year long, or what happens is whenever reimbursement cycles come, 2 or 3 people from the accounting teams manage it within a few days. Both of these things are manual, and both of things present their own set of challenges. Hope you guys are with me on this. What we will move on to next is some case studies which are reflective of the fact of how automated financial accounting and the financial automation in other areas as well in SMEs have helped these organizations, dig up a lot of their money which was stuck, or become successful regarding the usage of money, become more educated in financial management. Our first case study is about SmartZone. So SmartZone is one of the leading business setup consultants in Dubai, UAE, and has more than 14 plus years of experience. So given that Dubai is a business hub and SmartZone has been in operations in Dubai for more than 14 years, they have had to deal with a very high volume of transactions. These transactions have only grown year on year, given the fact that Dubai has grown as a business hub. So what happened was the finance team did not have a consolidated view of its finances. Every quarter or every year ending, every month ending, the finance team had to work overtime. There were a lot of staffing challenges because the amount of work that the finance team required to do, was increasing on a daily basis. What also another major problem was many employees made multiple payments daily related to government fees, professional charges, and service-related expenses. For this, the team managed funds from various accounts. So corporate cards as well as personal cards were used, and those associated with company PROs. So this is a technique used by a lot of companies. It happens in Abu Dhabi a lot, where there are company PROs department-wise, and the department-wise officers are responsible for the expenditure that their people within their zones, within their teams are doing. They mostly are given corporate cards to deal with it, or pre-filled cards to deal with it. And this is how the team managed it. What happened in result was a lot of scattered information. It made it difficult for them to get a consolidated picture of it at any given point of time. This had to be chased after and was not something readily available at the click of a button at that point of time. So as I said, chasing employees was a problem, particularly because it's a business setup consultant, there are a lot of site visits involved, and they might have other vendor suppliers too, regarding furniture suppliers, regarding HR consultants. So their consultants who worked from this state to this state and did a lot of traveling had a lot of receipts and issues with receipts and checks, which is why the accounting team had to do a lot of running after these people. They wouldn't visit offices, right? They were busy with their core jobs. So the accounting team had to do all the running. What happened was they chose Alan. So Alan, as some of you might know, is already one of the most well-known expense management platforms in Dubai. So what Alan did was simply in one single sentence consolidated all payments in one place. These are called Alan dashboards. So these are the results and benefits. Since the consolidation of expenses was done, these dashboards allowed business owners or managers to see whatever was going on in their business, who spent what, and the need to switch between different accounts could easily be done through this dashboard. This made easy to track all of the, as I said, some of those kind of expense management platforms which track every single penny that enters or leaves your business. It also allowed for easy allocation of funds to employees, as you see, because once I'm in control of the dashboard, I can just click on a certain menu and allocate funds through virtual cards to employees, and the employees can easily use it on their mobiles, through even their mobile phones. So it was quite a easy thing. No need for PROs to be involved, as was the problem. High visibility is the dashboard would give you a clear picture on what was happening on a day-to-day basis, on an individual basis, on an individual within department basis, on a department to department basis, as well as on a business basis, entire business entity basis. So can you imagine the kind of depth that it provided. It provided all managers whatever information was required to make informed decisions and optimize their finances. As you can see, they save 350 plus hours per month by automating their automating their expense management and using Allen dashboards. Our second case study deals with Greenwood's Legal LLP, which is a law firm based in the UK. Greenwood's has over 30 active users, 20 of whom travel internationally. As you can see, this is a purely reimbursements and approval challenge. As you can see, one of the first important thing was lack of an adequate approval system. Since the adequate approval process was problematic, expenses were approved without proper scrutiny. As such, as you can see, what we discussed earlier, manual and the same issues, no proper scrutiny. What does it mean? They're bound to come on to those future problems. Managing international travel, same. Manually, expenses were done for international travels. This was a hindrance since it was all done manually. As I said, as we discussed earlier, common issues, missing receipts, frequent issue. Again, lack of accurate expense tracking, as it happens manually. Credit card integration was not something which they were using, as it was done manually. They had Barclays credit cards, but then several members used to have been using one credit card. So it made tracking individual expenses difficult. So they chose capture expense as a tool, and the automation implemented with capture expense resulted in scanning and saving receipt in seconds. This is a common feature in a lot of expense management systems now, where you can just scan a receipt and it's done. The system takes all the information, uploads it itself automatically. That's all. Easy to use approval system. It provides a streamlined approval system where the managers and senior directors sitting in line all have a clear view of the request and are sent reminders in order to let them know that this timeline has to be approved. Seamless integration with over 50 back office systems. They account to your other accounting systems like Xero, Zoho, all of that. So you get a unified picture. You can import and export data easily from one software to another. Automated expense reporting, obviously, as it is. And what they did extra was they inserted the Barclays card transaction management system into the capture expense system provided. Results and benefits were 3+ hours saved a week, 35% increase in VAT recovery. As you can see, these are major benefits. A 35% increase in VAT recovery in the UK is considered quite an achievement. This is another company from the UK, which is Grail Group. And as you can see, they had manual processes. Because of these manual processes, there was a heavy workload for the finance team, and managing multiple active users became very difficult with over 30 active users. As you can see, automation implemented with Grail Group provided automated expense submissions, streamlined approval workflows, and a mobile-friendly platform. What happened was 60+ hours were saved every year, 5 days saved per month on internal, receipt verification every all, what ultimately resulted in very high employee satisfaction. That is what SMEs want to strive to send to their groups, right? That is what we got. Let's just move on to the time. I will not have much time. So let's move on to the key areas for financial automation. For all SMEs, these are some of the key areas that should be primary targets for automation. Let's start off with accounts payable and receivables. The benefits. Why do you automate? Why do you automate in the initial most processes? Manual invoice processing causes delays, errors, and cash flow issues, as we have already seen. Late vendor payments can strain business relationships. What happens with automation is scheduled payments, reduce late fees, and maintain supplier trust. Instant reconciliation keeps records accurate. According to Forbes, AP automation, accounts payable automation reduces processing costs by 81% and approval times by 73%. That's a huge statistic. Again, expense management systems. As we have just seen, automating expense management systems enables you to enforce policies and keep track of penny by penny, individual department wise. Payroll processing. It's always best to keep payroll processing on an automated basis, because payroll errors can lead to employee dissatisfaction, and it also leads to a bad name for the company. Tax miscalculations that happen while payroll processing are embarrassing, and should not be a part of your operations. Manual processing is the core reason why this happens, and which is why payroll processing is, in my opinion, the number one candidate to be automated if someone wants to start off at a point. Secondly, financial reporting and forecasting. Financial reporting and forecasting, as we discussed, some SMEs do not have the resources or the bandwidth to be employing manual people who do this. As such, automation is the best option because most automation software comes with a built-in option for analytics, which provides you financial reporting and forecasting reports, full structured reports of your entire business operations, of your financial health as well. Another area of automation is fraud detection and compliance, which, although not mandatory for some businesses, this should be the number one priority, those in fintech and cybersecurity. Manual fraud detection is absolutely slow, and which is why automated software, which not just detects fraud, but also highlights anomalies within your system, which needs to be taken care of. Compliance monitoring is something which comes automated with this. So you don't have to manually worry about the data storage compliance systems like IDR rules, which have come out recently in India as well. Okay. Now we come on to what to look for when SMEs should be choosing an automation platform. It's called the SME checklist. So basically the types of automation tools these are the most common types. Cloud-based accounting software, examples are QuickBooks, Xero, FreshBooks. Payment processing tools, which include PayPal, Stripe, and Square. Expense management tools, which include Expensify, Receipt Bank, etc. Budgeting and forecasting software, which are analytics related. Adaptive Insights, Float. These are the most common in the US and Europe. We come on to the key selection criteria. First of all, is it user-friendly? Your accounting department may not be made up of IT specialists or geeks who like to play about with Excel sheets or understand financial data to its core in a software format, right? In that way, low code based solutions or solutions which are user friendly are the best option. It should be intuitive so that learning and getting people up to date on the software does not take too much time. Onboarding should take the lowest time possible, and it should be available for multi-subscriber things so that multiple team users can have access to it. Also, toolkit, does it cover all your needs? When some tools might cover 8%, 80% of your needs, some might cover 90. I mean, I have not come across a solution which cover one single solution which covers 100% of a business's needs. But then you need to choose what kind of needs need to be covered at first. For example, some tools which come in for cash flow, expense tracking, and budgeting are some of the best things you can go for because it helps in managing the most part of your to be automated areas. Automation for accounts payable and receivables are something which come as a separate tool and can be used because account payable is one of the most critical areas in financial automation as well. Integration is important, and tax compliance tools that address your regional regulations would be something that can be incorporated as APIs as well. Okay, is localization. Whatever you are buying should, if it includes compliance or it includes currencies, it should be adapted to your region so that you don't have issues with VAT or other kinds of local taxation that you might have to deal with. Multilingual interfaces, if your company operates interstate or internationally, are the best features that you can look for during this. Scalability is multi-subscriber thing that I was talking about earlier. If you look for a solution which you can start off with 5 or 6 subscriptions and then go up to 60, and it offers you discounts as you increase your subscriptions, would be some of the best software that you can look for. Generally, these softwares have flexible pricing plans for businesses of different sizes, so you can choose this based on your size as well. But as the transaction volumes increase, you might also be allowed to customize your tools, to accommodate your unique business model. Is your data safe with that system? You might have to go into like reviews of the system. However, clear markers are bank grade encryption, 2-factor authentication, and secure open banking integration facilities. These are the major markers to look for. However, depending on your region or depending upon your budget, there might be much higher safeguards that you can employ in this area. Real-time insights. Can it help you make better decisions? This generally refers to the inclusion of data analytics or number tracking facilities within that tool. Financial management isn't just about tracking numbers, it's about using data to make informed decisions. You need reporting tools that conform to your business and can consolidate. Hopefully, if it's an AI driven thing, then the best for you, because it might be able to give you insights that you would need to sit in a boardroom for. Dashboards which are AI driven with up-to-date financial data analytics are one of the markers for this. They generally use predictive AI, predictive tools for forecasting as well. Identifying trends becomes easier because it's automated, and customizable reporting tools make you look for specific issues. Last but not the least is customer support. This is one of the most important factors that you need to be aware of. This is more like looking for an after-sales service when you're about to buy a car. So when you're buying this software, since it will be a long-term usage and this will be something that will involve novices using it as well, customer support is something to be very judgmental about. You need to look for multiple support channels so that they are available on chat, email, as well as physical. Self-service resources like tutorials and FAQs are very important. And these are onboarding tools which should be gone through your main staff who are in charge of these tools. They should have a thorough understanding of the FAQs and tutorials. Localized support for region-specific business is the physical tutoring part that we are talking about. That is the most assurable thing which can be done at the start. If they offer you a 2 or 3 day tutoring on how to use and how to change modules, that would be the best that the software would be able to offer. So coming to the end of our presentation now, this is a Q&A session now. If you could, anyone has questions, I'd be ready to take your questions and answer. Okay, I got a question from Dhruti. Would the software enable to track the actual distance travel and calculate conveyance and other expenses also? Okay, that's not how financial automation software does. This is something which is a RPA, which is a robotic process automation. It can be customized to do that. There are available softwares that can do that. What we were talking about was financial automation, which can track money coming, going out of your system, in and out of your system. That will not actually calculate distance travel or calculate the conveyance for you. It will take on the bill submitted by the taxi driver. You take a photo of it and it can gather information from there, like distance traveled and the fare. But it cannot just calculate the distance and fare on its own. Am I being clear? Hope I've answered your question. That's a different kind of software. Thank you. Any more questions? Okay, another question from Dhruti. Can you suggest any software that could help me on my requirement? So what is your requirement? Oh, you're talking about the actual distance traveled and calculate conveyance. Well, that would be that. I don't know about a ready software for it. These are called robotic process automation softwares, which can be created. These are ad hoc softwares that are created for a specific purpose. I'm not sure whether this particular task that you're talking has a software available for it on a branded basis. Thank you. Okay, so last minute for any questions, if someone has any. No questions yet. Okay. I guess there's a question coming in. Okay, I have a question from Barsha. So does your company provide? Yes, we provide expense management systems. Expense management systems automate all your expenses that are done through our systems. You can pay vendors via system. We have payment gateways. There arise a number of cases where vendors are not in position of POS machines, but you want to use credit cards to pay them. This helps working capital management in a lot of SMEs. So what happens is you use a vendor payment system and use either our supplied credit cards. We offer corporate cards, either PPA or credit through our system, our expense management system called BharatBiz. So either you use our cards or you can use your own card synced with the system to pay the vendor. This is one of the advantages while paying the vendor. It has its reminders. It can tell you when to pay which vendor. It has records of what amount has been paid to which vendor on what date. So you can just take out reconciliatory reports from it. Other than that, we offer cards which can come in virtual or physical formats. You can divide those cards within your employees. These can help you travel and reimbursement processes because they can track each department and individual expense. As I said, penny to penny tracking available on these cards. This is our system. It's called Bharat Biz. Just an overview of the system. It does a lot of stuff for expense management. Thank you. Okay, so